If you own or manage a small business, I'm certain that at some point you have thought about offering health insurance as a benefit. What are the costs? What are your options? How does it work? And so in this video, I'm going to go over what the current state of those options are and what I think is a smart way to go about this. When I say small business, I'm talking less than 50 employees, usually in that 2 to 25 employee range is what most of you are going to be and what this is going to help with the most. So let me first show you something. This is a graph from Kaiser Family Foundation's survey of 2023 employer health insurance, pretty much. And this chart right here shows the trend from 99 to 2023 in the percentage of companies that offer a health benefit. So this bottom line here is 3 to 9 employees. And as of 2023, 39% of employers that size were offering health insurance. So only 4 out of 10. So needless to say, 10 out of 10 businesses want to be able to offer health insurance because it's an excellent, arguably, aside from pay, the best way to recruit and retain great talent. But the costs have just become ridiculous. So what are the options? What is an affordable way to do it? So I'm just going to refer to my big health insurance guide here, which I've got a link to in the description. But there are 2 ways to go about offering a health benefit. There is a group plan, which is probably what you think of when you think of employer health insurance. You probably think that's like the way to do it. And it still is a way to do it, even for small employers. But the second option, which I'm going to focus on here, is a relatively new angle, but it is the way to make sure it's affordable and that everybody wins. So a group plan, I'll touch very briefly on this. I'm not going to go into the details of the different types of group plans or anything, but just consider how expensive they are. So referring back to that Kaiser Family Foundation survey, in 2023, the average cost, this is overall cost, ignore the split of what an employer pays, what an employee pays, just the overall premium in 2023 for single coverage was $8,400. For family coverage, it was close to almost $24,000. So if you're going to be competitive with offering a health benefit, you're going to contribute to some, perhaps most of that cost. That might be just too much to be feasible. On top of that, group health insurance rates increase every year, usually more than regular inflation. 10% or so is not uncommon, especially on the small group side. So if you're a small business, you're out of control of what those costs are if you do want to offer a group health insurance benefit, which is not the best position to be in. So a little bit of just an observation here. This is clearly a problem. I mean, you see the end result of it. Fewer employers who are small are offering health insurance as a benefit. So I'm sure you've heard that small businesses make up most of the economy in the U.S. The government, I think, has realized that health insurance costs are crushing small businesses, and they wanted to do something about it. I think they have done something, and that leads to the solution that I think is smart for smaller businesses in health insurance. What is a tax-advantaged way, or just a way to get out of the health insurance administration business if you are an employer, and honestly shift some of that burden onto the taxpayer. That's what the reality is here, but still give businesses an opportunity to chip in and help with costs. So the better way to go about it is just categorically, let's call it individually managed plans. So that's just a fancy way of saying giving employees money to buy their own health insurance on the individual market. So the big benefits of this, number one, as the employer, as the company, you are in charge of how much offering a health insurance benefit costs, because you decide, I want $200, $300, $400, $500 per employee, and that's it. And every year you can change that You are in charge of that, not an insurance company. You're not beholden to rate increases. So that's a huge win. Number two, in some arrangements here, in some ways to go about this, the money that you as an employer put in can be pre-tax for both you and the employee. The third big win here is for employees, they have more choice rather than call it the 3 or so group options that you whittle down from one insurance company. They've got the entire individual market to choose from. So that offers a lot of flexibility there. Also, in most cases here, employees can get or keep some, most, all of their ACA marketplace subsidies that they would be entitled to, which can bring down the cost substantially. So they're getting similar or better health coverage than a group plan, and they're paying a heck of a lot less for it. So there are 3 ways to go about this fancy term for giving money to employees to buy their own plan. The first is the simplest, and that is just a post-tax stipend. So you're just giving them extra money in their paycheck. And the intent is for them to go buy health insurance with it. Now, if you do this, the employee is going to keep 100% of whatever ACA subsidy they're entitled to, which is a huge deal. Something to be aware of, though, you cannot enforce them to buy health insurance with it, technically speaking, because if you do require them to, give you receipts for, hey, this is my bill for my health insurance plan, give me my X amount of dollars. If you do that, then you are technically operating as a group health plan, as an employer, I should say, an employer health plan. And so that has a bunch of tax ramifications. So don't do that. That's kind of the one downside of this approach. But, if you've got a good culture, if you give the right education, you partner with a broker who can help these people choose the right plan, make the most of what's on the table for them, that's going to be less of an issue, if not an issue at all. But for most companies with up to 20, 25 employees, this is the simple way to do it. This is the way to go. You don't get the pre-tax money benefits, but overall, it's just the way to go. The second way to approach this is with a QSEHRA. So that stands for, it's QSEHRA. So it's Qualified Small Employer Health Reimbursement Arrangement. Quite the mouthful. But anyway, it works much the same as just giving a stipend. Couple of differences. I should say this only works for employers up to 50 employees. So we're safe here. That's most likely you, if you're still watching. But the pros of this, you can enforce or you can require employees to use the money to buy health insurance. You can do that on a reimbursement basis, just like an expense report. So there's that. And then it also, when you establish the QSEHRA, it creates an immediate enrollment window for everybody who works for the company, who is participating in the plan, who can join the plan. So that is great. If you've got a bunch of employees or maybe a few who really need health insurance and they're stuck without an enrollment window, they would have to wait till the first of the next year in another circumstance. So that's another big win. The cons of a QSEHRA. The big one is any dollars that you put in to help employees pay, that's going to offset their ACA subsidy. So, for example, let's say an employee is entitled to a $700 per month ACA marketplace subsidy. If you give them $300, their ACA subsidy is going to go down to $400, and your $300 would stack on top of that. The employee would still get, to them it is the same amount, that $700 or so, but it would be double dipping because that's pre-tax dollars that you put in. It would be double dipping if they could get those dollars from you and the ACA subsidy. So it keeps it fair that way. The other con here, maybe not such a big deal, but you need to contribute the same amount for every employee. You can't go up or down based on the types of jobs that people have or where they're located. So that's a QSEHRA. That's going to be, a minority of the time it's going to be the right option for smaller employers up to 20, 25 employees. And then the third category is the ICHRA. So that's the Individual Coverage Health Reimbursement Account. So this works a lot like a QSEHRA, but this is what makes the most sense if you've got 50 or more employees, because this satisfies, as you might be familiar, once you hit 50 full-time equivalent employees, you need to offer employer health insurance that is quote unquote affordable. So an ICHRA will satisfy that. It's still a way to give pre-tax dollars to employees to buy their own coverage. The big difference here is whatever dollars you put in, or I should say, the employee has their choice of either taking the dollars that you offer or sidestepping it and opting for their ACA subsidy in some cases if you structure the plan that way. So you lose that kind of truing up of subsidies and your contribution, but in some cases that can work out okay. The big thing here with an ICHRA is you can customize it based on class. So, just for example, if you have different locations, you can change the contribution amounts there. A bunch of different ways you can split that up. The con of this, it's going to be more complicated to set up and administer. You want to partner with, someone, an administration company that really can take most of the work off of your back. So those are the three options. Something I want to put as a footnote here: no matter which way you go with this, it doesn't make sense to cheap out on how to administer it. You want to budget anywhere from $30 to $90, $100 per employee per month for a platform and the service that goes with it to administer this, to help, give support to employees as they make decisions on their plan, if they got questions about their plan. So keep that in mind as kind of a baseline. And then as far as budget goes for each of these three options, let me just revisit this. For the post-tax stipend, if you're not going to be able to swing at least a couple $100 a month, it's really not worth going for it, because that just doesn't make enough of an impact for the employee. And then the QSEHRA route, about the same, $250 a month. That's really when we're starting to make it worth it here. And then for an ICHRA, at least $400 a month would be my target budget. Again, you can go up or down, but that is going to keep you competitive and make it worth the effort. So those are the three options. If I can help you, link is in the description. I can help you one-on-one, and hope that was helpful. See you in the next video.